Welcome back, and joining me for a look at the day's markets action is Cartesian Capital's Anthea Gardner. Thank you so much for your time, Anthea. It's been quite an interesting day because the theme of geopolitical tensions has been a continuous one, but it seemed that the risks from the Russia-Ukraine war were kind of in the back burner, but now seeming that they have resurfaced. And of course, we see that the markets are spooked, particularly looking at the US markets and the European markets today. What exactly has spooked markets?
Sure. So Ukraine launching long-range missiles into Russia has definitely got the market very nervous. Even though Russia says that they shot down 5 of the 6 missiles, and the only one caused a small fire, I think they said around a warehouse or something. But we saw the VIX jump 8.5% in intraday trade, which, you know, that's the fear index. And so if that indicates the market's scared. And then, of course, gold rallied $24 on the day alone. This is an interesting one because we've seen gold kind of continue to rally. And then in the last, I'd say probably a week, I think, it's come off. So it was overstretched, I think. Although, you know, it is up, I think 25% for the year or something. It's one of those that just keeps going up. But if you think about where the dollar's gone relative to gold, you have to think that non-US investors now see gold even 5% more expensive on top of this nice little rally. And then the rand, that was an interesting one. It traded between 17.95 and 18.50 and kind of closed at 18.06, so definitely weaker. And of course, sorry, I shouldn't say weaker. I should say dollar stronger.
Yes.
Because the Dixie index, you know, the DXY, which is a basket of major currencies against the US dollar, has had a really good rally in the last couple of weeks, and especially today. And then in the bond market, we saw still some bond buying today. And it's interesting to note that foreigners are still buyers of South African government bonds. You know, they still see it as a good place to be. What we have seen, though, which is interesting, is that they do understand that there is heightened global risk aversion, and post-Trump kind of being elected back to the White House, what the investors are doing is not necessarily selling their holdings, but taking out hedges. You know, so just hedging out some of the risk with currency and swap overlays, basically.
And Anthea, it's actually been quite interesting because even when you look at the equity market, even today with the escalating geopolitical tensions, most of the pressure is in the US markets and in the European markets, but actually not on the JSE. So are things just fundamentally maybe still a little bit more supportive for especially South African equities, maybe not looking at the rand at this point?
Forget the rand, right? Who cares? So difficult to say because I don't think that anything has fundamentally changed. Like, I understand we've had no load shedding, we still have issues with Transnet, it's being sorted out, and so forth and so forth. And interest rates are coming down, so borrowing costs for companies are cheaper, but not that much yet. I think the rally in the South African equity market is really a sentiment rally. And I'm a bit nervous that that's going to run out. Like, we need to do something to get it going again. So, you know, hopefully we'll get another 25 basis points rate cut on Thursday, which the market is pricing in. But there's another side of this. With Trump coming in, moving into the White House, I think that does leave Powell in a precarious position. You know, there should be a division between the White House and the Fed, but it's Donald Trump and he doesn't care. So, and we did see the market, our local equity market, sell off a little bit. It was much higher. It closed, I think, like about 10 basis points higher, but it was much higher during intraday trade. So we did see a little bit of a sell-off.
All right. Well, let's get into Coronation that did not see a sell-off, rather on the other side of the spectrum. Its share actually climbed, I think, more than 3% on the day. I did come out with annual results, top line up. Also did see a headline earnings per share there tripling. Also fund management earnings per share increasing by 273%. Were those numbers an expected boost for investor appetite today?
So Coronation's been a very difficult share to hold if you're holding it for the last couple of years. because for two main reasons. I'd say that SARS issue that they have, the tax issue.
Yeah.
And then secondly, they keep losing assets under management. You know, they're basically our competition. And somebody once said to me, you don't have a business unless you're managing money. And so when Coronation's AUM fell below 600 billion, everyone started panicking. It's now above, well, closer to 670 billion. And so it feels like they're getting back on track. And even with this 35 billion rand two-pot system withdrawal that was announced today, Coronation seems to have kind of found its way again, kind of in the forest. So yeah, a decent 7% increase in revenue, 9% increase in earnings per share, AUM back up 11%, and then that tax issue got mitigated, is I think maybe the word,
yes.
or you know, came to a head earlier this year, and Coronation was able to release those funds that they'd put aside and pay a nice little dividend out of that provision. So, and you know, South Africans love dividends.
Of course, of course. I mean, yeah, they can have bad numbers, but as long as they're paying dividends, they're fine. Well, let's get to your stock pickup for today. Anthea, what are you loving?
So I saw Walmart's results also came out, and actually my stock pick is exactly in the retail sector. I like the fact that we've got this two-pot 35 billion rand withdrawal. So consumers, I think, will be feeling a lot more comfortable. Black Friday and then an expectation of the Santa rally should really give retailers a nice little boost. My retail pick is Mr. Price. Now, before you say anything, I know it's not cheap, 20 times historic earning. But, you know, it's probably one of the first companies I ever analyzed. And I won't lie, it always feels perfectly priced. Like you don't think it's cheap and it just keeps going. So I think we'll see a nice little boost from the December period, the Black Friday sales, Christmas, back to school spending as well. So I'm going with Mr. Price today.
By the way, I love that concept, the Santa rally. So of course, we're looking forward to that. Thank you so much for your time and for your insights today, Anthea, on what has moved investors' money. That was Anthea Gardner from Cartesian Capital.